Welcome to No Nonsense. I never made any serious money trading the stock market until I figured out that trading the market is like any other business. There are certain rules for running a business that also apply to the stock market. When I was a Wall Street broker, I had a client, and he only traded one issue, Teledyne. Now, he had been with the company, so he knew the company forwards and backwards. But after he retired and started trading the stock, he knew the stock forwards and backwards. A few years later, I was living in Hawaii trading the market, which opened at 3 o'clock in the morning. And there was a gentleman there that also only traded one issue, Apple Computer. That was the hot stock then, just as it is right now. And it wasn't that he had any particular knowledge about Apple Computer, but he looked at every single trade. He knew at prices on an hourly basis where buyers would come in, prices when buyers would move away, and he only traded that one issue. And I learned then that there was some secrets about running a business that also applied to trading the stock market. And I want to share some of those with you. The number one rule in every business is that the customer is always right when it comes to price. Sellers determine if a transaction is going to take place. Nobody can force you to sell your used car. That's your choice. However, buyers, not the sellers, determine the price. Let me give you a silly example. Here is the price cycle of a Justin Bieber t-shirt. At the top, it was selling for 1,000 pesos. And then buyers were only willing to pay 750, and then 300. And eventually, buyers were only willing to pay 100, and that was buy one, take one. These prices were not determined by the seller. They were determined by the buyer. Sellers don't lower prices out of the goodness of their heart. They lower prices because there's no more buyers. You've seen this chart. This is the price life cycle of a stock. Starts with optimism, reaches euphoria, then finally goes to a low of despondency and depression, and hopefully there will be optimism. What you're looking at here is the life cycle of buying. In fact, at the top, the point of maximum financial risk is buyer euphoria. And we call that a buying climax because at that point, there are no more buyers willing to come in. Here is the t-shirt price cycle of Justin Bieber. And you can see it went to euphoria, back to despondency and depression, and maybe a little optimism. Eventually, buyers were not willing to pay the same price as they were at the beginning when Bieber was in the 18 to 21 age group and at the beginning and peak of his career. Buyers walked away and the price went lower. You're going to read in the newspaper that prices went down because of selling pressure. It's not true. Prices go down because there's no buying pressure, particularly over a period of time where there's less and less buying as prices go lower. In truth, the only time that sellers dominate the price movement is at the bottom, because at the bottom, that's when the sellers are falling all over each other to try to get out of the market because there are no buyers. This is just one of the lessons from running a business that can help us make money in the stock market. And I'm going to share with you some of the rest of them in the future.